Hello everyone, and welcome back to another teaching. This video, before we even get into it, will be a lot easier to understand if you've seen my teaching on change in the state of delivery and macro signatures, because we're going to incorporate a lot of those concepts in this video. And if you have an understanding of those concepts discussed in that previous video, this will make things a lot more clear and easier to understand for this lesson. As you can see here, today's discussion will be on macro power of 3. And once you see this stuff, you will not be able to unsee it. And it is really, really interesting how precise we can get with our entries and just our overall internalization of order flow. So getting right into it, we're going to be looking at a plethora of examples. All examples will be on the 1 minute time frame, and there isn't really a one size fits all strategy to the concepts that we're going to discuss in the examples that we're going to walk through within this teaching. The main thing is that we want to look for manipulation below the macro open when we are bullish and above the macro open when we are bearish. And of course, this will make sense as we walk through the examples. So here you're looking at the 1 minute chart for Nasdaq on April 16th, 2024. And in this example, and as we go forward, you'll see which macro it is and kind of the key takeaways that I am discussing through the price fractal that you see in each example. So in this one specifically, we're in the 1050 macro. And what do we see occur before we enter that 1050 to 1110 time window? We see an SMT, which is that Kraken correlation, or in other words, we're going to classify that as a strong algorithmic signature. So we're seeing that signature before the macro open. And then number 2, you see here, right at 1050 macro open, if you see MO just throughout these examples, and if you just see them in future charts outside of the realm of this teaching, MO just stands for macro open. That's the abbreviation I will use during this video and going forward. And since we're looking for a long here, as you can see, we want to look for manipulation below that macro opening price. So how to identify that macro opening price? It's simple. We're at the 1050 macro on the 1 minute 1050 candle. You just take the opening price and you want to see price do what? Have that power of 3, that Judah swing, that manipulation, whatever you want to call it, that goes down to complete one of two things: a liquidity sweep, or I should say, refer to a discount PD array to offer smart money longs. And then we combine concepts like I mentioned in the intro of this video, like high probability inversions, macro signatures, high probability BISIs, high probability order blocks, things of that nature. And we can really, really get precise entries utilizing some of the things we're going to discuss in this video. So as you can see here at 1050, we drop down and do what? Number 1, we run this short-term swing low. So we're having manipulation and a liquidity sweep. But where are we running into? This inversion. So that's a macro inversion. So we understand that's high probability in and of itself, on top of the fact it's not charted here just for clarity purposes. But you can see this little BISI that's also overlapping with this macro inversion as well. So when we see this manipulation here, let's say we enter long out of this BISI right here, and then in the next 2 candles we see that displacement. We don't want to be in a rush to jam our stop loss below that swing low, especially when we're in this macro time period, because we know that manipulation below macro opening price is likely. So until we see clearly manipulation and the algorithm refer to a discount PD array and then displace, we really want to be patient and not really trail our stop loss too tight. Okay, so here, on top of the fact that we saw manipulation, retracement to a high probability discount PD array for smart money to enter their longs before the expansion and completion to this buy side liquidity target up here at the top of the screen. This is something that you'll also see that is beautiful as we walk through these examples and just your charts going forward. If our bias is long and we're looking for long entries utilizing what we're discussing here, which is again manipulation below macro opening price, typically we'll see this engineered buy side liquidity where we can see this swing high that was created right before the start of the 1050 macro is not purged before the manipulation phase occurs. So that's just more engineered buy side liquidity. Of course, like I've mentioned and like you can see here, our target is that upper external range liquidity at the buy side at the top of the screen here. But if we see these equal highs, relative equal highs, and them engineering buy side liquidity, and then we spot the signatures during the macro, below macro open, that's even more of a reason to expect a turning point. Okay, so we're going to walk through various examples where some more of the situations are a little more unique, where some have an SMT, some don't, some have a macro inversion, some don't. But like I said, the main thing is that we're looking for manipulation below macro open when bullish and above macro open when bearish. So for our next example, we're on the 1 minute chart for the S&P. And as you can see here, again, we have labeled kind of our 3 steps and our 3 clear takeaways of how we're internalizing this order flow here, combining concepts. So in this example, we have what? Our 930 fair value gap, which of course we discussed in previous teachings, previous reviews, previous lessons, etc. And we understand the significance of this specific inefficiency. The first clear displacement or fair value gap formed after 930 New York open. So of course you see that 930 open here, and then we have that Judas swing above 930 opening price, running some of this internal buy side liquidity. And then we finally displace lower and close below the 930 fair value gap, which we know in and of itself is of high significance if we have clear sell side liquidity to target, or if our bias is bearish for the opening range or the AM session. On top of this, look at what time we are closing below the 930 fair value gap. 9:49, 1 minute before the 950 macro begins. So we're seeing that smart money handshaking where it's like, okay, the bodies tell the story. We should not close below the 930 fair value gap if we are bullish and we are to bounce here and go get the highs. But what do? We close below, come back up into it. But what are we doing? We're seeing manipulation above the opening price of the macro. Okay. And what are we doing? Referring back to that significant PD array, again, the 930 inversion fair value gap, where smart money is offered their short positions. Okay. And to kind of bring it all home, what do we expect this to be? If we have an inefficiency, in this case a SIBI, above an inversion, the 930 inversion fair value gap, we expect that to be a breakaway gap. And that's exactly what we see here. Okay, so we're seeing manipulation above macro opening price into a significant PD array when we have clear sell side liquidity to target on the opposing side of the curve. Now for this next example, we're going to be looking at Nasdaq's 1 minute chart, and we're going to be analyzing the 1150 macro and the next macro, the 1250 macro, for this fractal of price and how we can use them to understand what is occurring. So again, as we've been discussing for the first 2 examples, we're trying to identify that manipulation above macro opening price because we're bearish here. Okay, so we see that manipulation, but what do? Do they purge this high? No. They leave equal highs there, which serves as engineered buy side liquidity. So if we see them leave these highs and then we continue to displace lower, we really want to monitor the next macro or the one following that for an intraday reversal, at least back to this engineered buy side liquidity. Okay. And then we just hold runners beyond to whatever buy side liquidity is above this engineered buy side liquidity from the 1150 macro. So again, we can see that they left those engineered equal highs above macro open, then we displace lower. And look at what time we stop displacing to the downside, right before the 1250 macro. Okay. So in regards to the 1250 macro, we see some of the macro signatures come to fruition beautifully. Okay, we see that bounce. We see a change in the state of delivery where we start to see support off this order block. On this whole sell side of the curve, when we were continuing to fall downwards, were down close candles supporting price? No, right? But then here during a macro, because we know that's of higher significance, we start to see that potential turning point. Then again, what occurs? We close above this macro inversion, which we know is a high probability PD array. Okay. On top of this, 1250 macro opening price. Again, you just go to the 1250 1 minute candle and find that opening price. That's this dotted line dragged across here. And you can see that this work, the manipulation, is being done below that macro opening price because we're looking at a potential reversal, because we're analyzing the previous macro to see, okay, did they engineer any buy side liquidity that would make more sense for a potential reversal back to that buy side during the next macro, or like I stated, the one that follows. So in this case, it would be the 150 macro. But of course here, we see a beautiful reversal during the 1250 macro, okay? They run this little short-term swing low into the order block, and then once we close above the macro inversion, what occurs? We bounce on the retracement here. We bounce again. By extension of that, we're failing to reach consequent encroachment. So see what we're doing? We're combining concepts. But we know that during this macro, an intraday reversal would make sense based off what we're analyzing from the previous 1150 macro, targeting that engineered buy side liquidity. Because why? Because during this, there was no liquidity sweep. Yes, there was manipulation above macro opening price, but they engineered this for later when we're on the buy side of the curve. So you can expect price, if we start to see these signatures identifying a potential turning point, you should really be confident in price delivering back up to this engineered buy side liquidity pool. Okay, and now we're sticking with the same example that you saw from the previous chart, but I removed the annotations and I kind of want to discuss what you see here, the macro range premium, the macro range discount. Now, if you look at the upper portion of the screen where my cursor is, I have a line labeled intraday dealing range equilibrium, okay? So of course, this is the 1150 macro. So before that, we were selling off before. So if we're looking at the entire intraday range from 930 to the high in this case, since we were bearish in the initial portion of the AM session, we can measure that whole range and try to get there. Okay, we can try to get to equilibrium and get those extra few points. But we can also have higher confidence on the things we kind of just discussed, where if we see that engineered buy side liquidity, that's a great target in and of itself, identifying the smart money reversal during the 1250 macro. But we also are even more confident in that because it's below that intraday dealing range equilibrium. So we know it's kind of a lower hanging objective to get, right? If price is going to reach up to that intraday dealing range equilibrium, by extension, of course, if we're correct about our analysis, it's going to come purge these equal highs right here. So that's the easier objective there, right? Because sometimes we'll see where Nasdaq, which we're analyzing here, Nasdaq will fall just short of equilibrium of the intraday range, but ES will get there. So if we want to really lock in profits, and again, this is a great move, okay? If we want to lock in profits, engineer buy side liquidity, these equal highs, that low hanging fruit is a great objective. Okay. Another note on this, we know that if we are in a buy program, price is, I'll say, allowed to return to discount before the objective is met. Okay. You can see my annotations here. You don't want to trail your stop here. Even when we had this push here, where I have labeled engineered buy side liquidity, we came just a few points short of our engineered buy side liquidity initially, right? That higher objective, our terminus for this specific long, okay? Even as we come up here, you don't want to jam your stop loss too quick, right? Too tight, because we know sometimes they'll do something like this where they return it down to that macro range, right? And again, what do I mean by macro range? If we see a high form in the 1150 macro, and then during the next macro, we see a reversal, we know that this is the dealing range that the algorithm's working on, and we can see that here. Engineer buy side liquidity, come down one more time to purge that sell stop and refer to what? A random level? No. Look at equilibrium of the macro range. Beautiful. After that occurs, that's when you expect speed. Okay. That's that final stop hunt before going to our target. So beautiful delivery on here. Look for this stuff in your chart, and we'll continue to look for examples of this in price action because this stuff occurs over and over and over again. Okay, so on to our next example. We're back to the S&P's 1 minute chart, and we're looking at the 1050 macro power of 3. So our first annotation is that we see a liquidity sweep below the macro opening price. So you can see again, like the other examples, this dotted line, MO, macro opening price, right at 1050. We come down and we have that sell side liquidity purge one last time. And then what do we see? We start to see our macro signatures where we have a macro inversion and we see the signatures failing and respecting, right, to close below consequent encroachment of our macro inversion, which we expect if we've identified our potential smart money reversal or intraday turning point. Okay, so after we've identified the manipulation before macro open, we're just waiting to see these macro signatures. Okay, because we want to think like the algorithm, we want to think like smart money. So where is the algo offering smart money their position to enter long inside of this macro inversion? Okay, another note just to kind of add some other concepts. Why didn't we return to these two BISIs below the macro inversion? Because they're breakaway gaps. The macro inversion is acting as a smokescreen, and the algorithm's not going to go down there. So as we see price come down but fail to get to these inefficiencies and the low of the inversion in and of itself, we're seeing these signatures of strength, and we're trusting that our analysis is correct throughout all of this price structure. And here we are again, sticking with the same example, utilizing the macro range. So see how this high was formed just after the 950 macro? That's still applicable. And how we had this reversal during the 1050 macro. This is the range that the algo is going to refer to. So just like the previous example with Nasdaq, we don't want to trail our stop loss below any of this internal range sell side liquidity until our objective is met, because we know that price will, and again, to stick with that same terminology, is allowed to return to a discount until the objective is met. So we really want to give our stop loss room to breathe until we get real close right here. Look at this, to our objective, and of course, eventually purge that. But again, note how price was spending a lot of time and kept dipping below for stop hunts the macro range, right? Because of course, just like the Nasdaq example, we're looking for longs here. So smart money is going to do their buying, and price is going to seek liquidity inside of a discount before expanding to our buy side objective. Okay, we're sticking with the S&P 500 here. And what do you guys think is going to happen? We're going to see the same concepts occur again and again and again. So we're looking at the 950 macro. We have a clear buy side liquidity pool to target in terms of opposing range liquidity. And right at the start of the 950 macro, we identify our macro opening price. And what does the algorithm do? Dips below there, creates a swing low, comes back up. Does it purge that high that was formed right before 950 macro? No. See how it created equal highs as engineered buy side liquidity, right? And then it comes back down to purge this swing low, okay? Offering smart money their position to get long below macro opening price. So we're identifying a liquidity sweep. We're identifying our manipulation below that opening price. And we're seeing, on top of the fact we have this buy side liquidity pool up here, that is our initial target, we're seeing further confidence in our bullish analysis because they're leaving this engineered buy side liquidity during a macro. Then what do we see? This BISI, the bodies respect it, and not charted here again, just for clarity purposes, we see an inversion that is getting worked during a macro, okay? Just to kind of, again, talk through the rest of this delivery and adding some concepts. If this is a low, a high, a lower low, then what are these two consecutive up close candles? A bullish breaker. Where is it residing? Right around the midpoint of this BISI here, okay? You expect this BISI to not get filled completely. That's your unicorn, that's your silver bullet, whatever you want to call it, okay? But we can see how utilizing these concepts allows you to understand how high probability these setups can be. And then, of course, we deliver and expand higher to our buy side liquidity target. Okay, so this is a very cool example of utilizing the 930 fair value gap like we discussed inside of this community. So we can see the 930 fair value gap was worked prior to the 950 macro on both sides, right? We had that initial displacement lower, close above it, close back down below it, close back above it, purge this high. But then what occurs? Right before the 950 macro, we have an SMT where this is Nasdaq, of course, the 1 minute chart. Nasdaq was failing to make this higher high, and the S&P was making a higher high. So what do we internalize that as? A strong algorithmic signature right before a macro. Then what occurs? After that signature clearly takes place, we close back below the 930 fair value gap. So the fact that we see this SMT close below it, and then during the macro, we're referring back to it. This is what ICT means when he says we cut through candles, okay? Where this first fair value gap formed after 930 opening price wasn't initially utilized really to have any substantial move. But once it was time to do what price wanted to do, again, complete the objective to what? to London low or sell side liquidity. Once it was time to do that, it referred to that significant PD array, which again is the 930 fair value gap. Okay. On top of that, relating it back to this discussion, where is this taking place? Above the macro opening price, where we know when we are bearish, the algorithm is going to go above macro opening price to offer smart money short positions, okay, and a premium and a significant PD array to run buy side liquidity like we do here with a short term swing high there. And then we start to see that displacement lower. Okay, so this is a really great example of how we can use the 930 fair value gap and cut through candles when we have significant PD arrays during a macro window. Okay, and for our last example, we're going to be on Nasdaq's 1 minute chart, and we're going to be looking at the 150 macro. So we're in the PM session here on Nasdaq's 1 minute, and we see again these concepts at work beautifully. We're inside of that macro, and where do we want to look for shorts again? And where do we want to identify our manipulation? Above the macro opening price if we're looking for shorts to sell side liquidity or a discount PD array. In this case, of course, it's sell side liquidity as you see here. And at the start of the macro, what are we doing? We're going above that macro opening price, running buy side liquidity, and then we start to see macro signatures. Okay, this is a macro inversion. By extension, this large SIBI here that is not charted for clarity purposes, does it get filled all the way? No, it's a breakaway gap. And we understand that because of the macro inversion. Bodies respect the macro inversion. We wick to the high, then we start to displace lower. Okay. All these examples, we see this type of delivery over and over and over again. And look what they do right before and leading into that 150 macro. This whole time up, obviously price knew, I guess I can say that terminology, knew that it was going to come down and reverse to get to sell side liquidity. So if it's going to go down there regardless, what's it going to want to do before, right? It's going to want to have this little double bottom or engineered sell side liquidity to convince people that this is strong support, to put their stop loss below this before the actual turning point occurs. And randomness, I say that as a joke. When does the turning point occur? After the manipulation, above macro opening price, of course, during that 150 macro. Then we get the macro signatures like we discussed inside of this community and review on a day-to-day basis over and over and over again.